Okay, why don't we begin? Hello, everyone. Once again, my name is Stephen Primo. I am the president and founder of SpecialistTrading.com, and we are your premier online source for trading, learning how to trade, and education in trading. I firstly want to thank all the good people at FX Street. Hello to everyone, and thank you to, I believe, Mr. Ruffley at intraday.com for giving a fine presentation. I was listening to that prior. A very good presentation. And just hello to everyone, and thank you to the attendees for joining us today. For those of you who are unfamiliar with specialist trading or haven't been to any of my webinars that I've been giving for FX Street, just to give you a little bit of background about myself, I have been trading for 35 years. I started my career of trading on the floor of the Pacific Stock Exchange, where I was trading for 16 years, and 9 of those years I was a specialist, hence the name specialist trading. Specialist was basically the person that made a market in a fixed amount of stock. So I traded through the crash of '87 and a lot of different market environments. And in the mid-'90s, I left the floor and I decided to manage money and trade on my own. I virtually traded just about every market. I've traded the E-minis, the stock market, and the Forex market. And in the last 5 years, I got heavily into teaching. And 3 years ago, I started SpecialistTrading.com. Now, I know a lot of you will say, well, Steve, this is a Forex class. Your background is in stocks, but everything I learned and everything that has helped me through my career can easily be transferred into other markets. And so I like to share and to teach my students and my mentees a lot of what I learned and hopefully elevate their trading. As I stated, we are an educational company. I really like what they were saying in the last presentation. You can tell when people have been trading for a while is that they say the keys to success is really about consistency, not hitting these home runs and not getting these strategies that someone will promise you the world and makes you 500% in the first year. The traders that have been around a long time say the same thing, where you got to keep things as simple as possible, and we really want to give you all the information we've learned, but then you have to design it to fit your own specific needs and temperament. And that's what we do as well here at Specialist Trading. So when you see a lot of traders that are trying to give you this get-rich-quick scheme, you just have to be very careful. It's the traders who have been in trading for 20, 30, 40 years down the road that really know it's all about education and fine-tuning it to fit your needs and really what your risk is and how well you want to trade. You want to trade aggressively or conservatively. So that's what I try to do, give you education and then match it to your persona. Now, what I'm going to be talking about today is some more education for free, and this is a powerful technique for capturing trending markets. I feel, in my opinion, the Forex markets are the best trending markets around. They, once they get going in one direction, if you're on board, you stand to make some really nice profits. So this technique, even though it works in other markets, we really mainly focus this technique on the Forex markets at Specialist Trading. So I'm going to show you the rules, and as well, I'm going to give you an entry technique to use once you've captured the trend with this method. So stick around and get out your pencils and paper so you can write all this. You can start using this as early as today, but I would always recommend and suggest that you paper trade this so that you'll see how it fits and you can understand the process. It's just one in hundreds of different techniques and methods that we share at Specialist Trading. Now, before we begin, it's required that we show you our disclaimer. I'm going to show you performance results using this particular method, but please remember that we can in no way guarantee that any of these results will be repeated in the future. So as you're taking a moment to view our disclaimer, I'd also like to mention for those people who have been to my presentations before, you know that my style is I like to wait to the very end to answer any questions. I know some people who are new or may have come in late will begin to ask questions right away. And I understand I have questions sometimes too when I see presentations, but I like to keep my question and answer to the very end. That way the presentation will run a little smoother. Many times if you wait around for 1 or 2 slides more, your question will be answered. So please just write down your question if you happen to have one right at the beginning of today's hour presentation, and I'll get to it at the end, I promise. If we happen to run out of time, I don't feel we will, but if we do run out of time, I will give you a phone number as well as an email address where you can contact us and ask us any questions, okay? So please just wait till the end to ask any questions. I'd also like to thank the people at FX Street, and I want to show you this link right here. They've been so kind as to furnish us with a micro site. This is where you can get all the information. So if you have any questions about Specialist Trading and what we have to offer in terms of our services, you can actually come to this link here. You can copy it down. It's rather lengthy, so we've shortened it. Here is the abbreviated version. You can copy this down as well. And once again, this was provided by FX Street. You can go and find out more about Specialist Trading and about myself once you copy down this link here at the bottom, and I'll give you this as well at the end of the presentation, here's what it'll take you to the microsite where you learn more about Pro Trader Strategies, which is our sister site, which sells and furnishes all of our individual strategies. And then you can learn a little bit about me and my bio. Okay, so this can answer questions as well. So if you have questions, you don't have to actually ask them now or try to contact us. You can simply go to the microsite and we'll furnish you with all the information. Okay, we also give course descriptions as well. Okay, so let's start the presentation. Now, as I said, I was a specialist on the floor of the Pacific Stock Exchange. The specialist was, the one who managed roughly about 50 or 60 stocks and made the markets in them. But as I've, made no secret about it, I struggled for years, my first few years when I was a specialist. Someone would think, well, once you're on the floor, you just have a license to steal, you make tons of money. But that's not true. I was really in doubt as to how long I was going to be a specialist. I just couldn't seem to get going. So I really had difficulty in my first year or two trying to get ahead. I was just basically breaking even. And I came in contact with a few elite traders that taught me things, that changed my way of trading, but most especially my way of thinking around, so that I was able to be successful. And really success is not about, once again, making $1 million, because I can tell you stories of traders that made hundreds of thousands, if not millions of dollars within a year, and they're no longer trading. So that's really not the meaning or definition of success. Success is more about consistency. They were talking about that in the last presentation. That's why I really connected with intraday.com so well, because they're really, traders who've been around a lot know that success is consistency. It doesn't matter if you're trading some great strategy or system that blows up after a year or two. What matters is that your method or your education will sustain you for 20, 30, 40 years down the road. So that's what my goal is, to teach you with this edge, and that edge is the specialist edge. All right, so here's what you're going to learn today. Once again, I'm going to give you 3 edges. These are great edges, and the first one is the proper setting for the RSI. Okay, this is the proper setting for the RSI, and it's a great way to use it, because most people, in my opinion, use the RSI differently. The second edge is the RSI directional tool. We're going to use this as a directional tool. Most people use the RSI as a buy and sell tool, and telling them when to get in and when to get out. Okay, so we're not going to use it that way. We're going to use it as a directional tool. Then I'm going to show you this entry technique, where once you learn how to properly discern where the trend is, you can use this entry technique to enter into the market. Okay, so this is not a strategy, it's not a system, it's just a nice tool for entering into long-term trends here, some really nice trendy markets, whether you're looking at a 5-minute chart or a monthly chart. Doesn't matter. You can use it in any time frame and in any direction. Now, I already see here that we have some people asking questions. Remember, once again, before we begin, I'm not going to answer any questions till the last 10 minutes, so please wait till the end, because I'm not even really going to look at them. I'm really more concerned about making sure you understand this technique, okay? So wait till the end to ask any questions. All right, so here's the first edge. We're going to talk about a proper setting for the RSI. Now, most people, in my opinion, use the RSI incorrectly. Why? Because they've been taught it's a certain way in which to use it, a certain way in which to properly, learn how to enter and exit the market. We're going to show you what we feel is the proper setting for the RSI. Okay. What we want to do first is edit the standard 14-period RSI setting to a 5-period setting. Okay. So most of the charting software packages you use have it set at default at 14. All you want to do is go into your charting software and just edit that length period from 14 to 5. Okay? So that's the first thing we want to do. We want to make sure that we're getting rid of that 14. It's entirely too long. We want to speed it up and change it to a 5-period setting. That's our first edge. Now here's just an example. I'm going to be showing you some examples here. I'll first be showing you a lot of older charts, so don't worry. We're not trying to cherry pick charts that are 6 months or even a year or so old just so that it works for this method. I'll show you some current charts at the very end, but I'm showing you these older charts just so you can have them for educational purposes. We want to just make sure that you understand the process here and the concept. Now here's an older chart of British pound, a daily chart, and we have the standard 14-period RSI plotted, as you can see, okay, with the standard threshold 70 and 30. And this really, it's not giving us much information. There's really nothing we can really go off of too much here. Once we change that to the 5-period setting, you see it's a little bit more dramatic. You see we have a lot more fluidity, a lot more movement, and there are many more things we can do now with this. Even though we haven't told you yet and we haven't gone into detail, it just gives us a lot more opportunity. So that's why we want to change it to a 5-period RSI. Okay, you can do that now or you can do it later on. It doesn't really matter. Right now, we just want to make sure you understand the process. All right, so that's edge number 1. All right, we also want to edit the standard overbought, oversold thresholds to a 50 setting. All right, this is the second thing we want to do here with our edge. Here are the standard thresholds: 70 for overbought, 30 for oversold. This is pretty much the standard. This is what most people have been taught to use on the default setting. We want to change this to get rid of the overbought, oversold. We want to change this to read 50. That's it. We want to have one line reading 50. So we have a 5-period RSI and we have a 50 median line threshold. Okay? Makes sense? That's all we're doing. We're changing the RSI to fit these parameters now. You see how we're really looking at it outside of the box. We're looking at the RSI totally different from the way you've been trained or thought to think. This is what was taught to me on the floor. Most of the things that for some reason we've been taught or believe, like making your trading complicated, are really the things that lead us to be unsuccessful. Once we simplify things and use them in a different manner, we really start to get on that road of consistency. All right, so that's our first edge. We've altered the RSI, the way we're going to view it, the way we're going to look at it. Now let's go to the second edge. Now how are we going to use it? We're going to use the RSI not as a tool to get us in to find out when the market's overbought or oversold. We don't care about that. Overbought and oversold are those are discretionary ways of looking at the market. There's no such thing as overbought or oversold. You know that markets can go as high as they'd like or they can go as low as they'd like. So there's no such thing. It's subjective. So what we're interested in is in using the RSI as a directional tool. All right, so that's our second edge. How are we going to use this now as a directional tool to help us find these nice trends? Well, these are the rules. This is what you might want to write down. Let's say we're looking for a strong uptrend. Okay. All right, so we want to see the currency pair that we're tracking, regardless of what time frame. We want to see the currency pair price is above the 50-period simple moving average. All right. Now, this doesn't mean that it has to, none of the bars can be touching the 50-period simple moving average. It just means that for all intents and purposes, the majority of the prices are above the 50-period simple moving average. This will tell us that we're setting up for some type of uptrend. Okay? It doesn't have to be exact or extremely, detailed. The second rule is the 5-period RSI now must cross above that 50 threshold. So in other words, we were below that 50 threshold, maybe 1, 2, 3 settings, but now we're above it. Okay? So all that matters is at the same time that price is above or closing a little bit above on the currency pair, we also want to see the RSI above the 50 threshold. Lastly, here's the rule. A strong upward direction is likely. Now, we're not guaranteeing it, but is likely as long as this 5-period RSI closes above that 50 threshold for a minimum of 6 bars. All right, so if you see that the RSI closes above that 50 median line for a minimum of 6 bars, there's a very strong, extremely strong likelihood that a strong upward direction is likely to occur. Okay? So that's all we're looking for. This is extremely simple, but you're going to see how powerful this is. Let's go step by step. Once again, looking at older charts, but just so that you can understand this process. Remember, our goal is to teach you. We're not trying to give you facts and figures and numbers and statistics. We're trying to teach you and educate you so that you can go trade on your own. All right, step 1. Price is above the 50-period simple moving average. And remember, we don't have to be exactly above. As you see in this example, we have some closing below and we're kind of oscillating above and below. But for most intents and purposes, looking at this time period, we are fairly above, for the majority of time, above the 50-period simple moving average. So this is telling us that we may have some type of uptrend in place because we're above the moving average for the majority of these bars. Okay, these are daily bars in this example of the Australian dollar, as we see right here. Okay, step number 2. We want to see that 5-period RSI, that RSI that we changed now. We varied to now from 14 down to 5. We want to see that RSI cross above the 50 threshold. Now, we got rid of the 70 and the 30. We only have one threshold, which is the median line right here. So at the same time that price is above, we want to see the RSI go above the 50 threshold. Okay? Step 3. A strong upward direction is likely. Once again, not guaranteed, but likely, as long as the 5-period RSI closes above this 50 threshold for a minimum of 6 bars. All right, so as you've seen here in this example, we crossed here above. Someone could say, well, Steve, we crossed above here. Right, but how long did it stay above the 50 line? only one bar and then it came back down. So it's negated. Our plan is negated. And here we crossed up above it again as well. We stayed only for a couple of bars and then closed below or went below. So now we want to see that we're back up again. Price is once again above the 50-period simple moving average. So this is bar 1. Let's start the countdown. Bar 2, 3, 4, 5, 6. So we have 6 bars, and we've been above the 50 threshold on the RSI for this entire time. So this is telling us now that we have a strong likelihood that a very strong upward trend is going to continue. And look what happened. The Australian dollar continued to go up. Once this trend continues, and once we have the 6 RSI bars above the 50 threshold, we're no longer concerned with what it does. We're just waiting to see if a trend continues. Now, if the RSI goes back below, then we start the countdown all over again. Let's look at a weekly chart now of the euro dollar. This is an older chart once again, but as you can see, we crossed above the 50 line and then came back down below it. At this point, we crossed back above it. For most intents and purposes, the RSI or the price bars were oscillating above and below, but once we crossed above, we closed above the 50-period simple moving average, and then we were above for a total of 6 bars, and that entire time the RSI was above the 50 threshold for 6 bars. So this was telling us you're probably going to have a nice upward trend. And look what happened on the weekly time frame of the euro dollar. Here's a 4-hour chart of the Canadian dollar. Once again, we're oscillating back and forth. In fact, we're actually below the 50-period simple moving average. But once we crossed above, we closed above. We have 6 closes above the 50-period simple moving average. And at the same time, the RSI did not close below the 50 threshold. And look what happened. We had a really nice, quick little move here of roughly about 100, 150 pips on a 4-hour chart. All right. Let's look at this now if we're looking to go short, if we're looking for downtrends. It's the same process. We just flip everything upside down. So now we want to see price close below the 50-period simple moving average. Once again, we'd like to see the majority of the bars for the last maybe 10, 20 bars closing below, but that's okay. As long as only one closes below, that's fine, because we want to see it connect with the second rule here, which is the 5-period RSI. At the same time price closes below the 50-period simple moving average, we should see the 5-period RSI cross below the 50 threshold. This time we want to see it go below the 50 threshold. Okay? Now once it does, a strong downward direction is likely as long as we stay in that 5-period RSI below the 50 threshold for a minimum of 6 bars. So it's the same rules, we just flip them upside down in order to go short. Very simple. Here's a daily chart of the Swiss franc, and as you can see, it's more defined here that we're obviously well below the 50-period simple moving average. Now, the RSI was above right here. Here's where it crossed below. So that's our countdown number 1. Our first bar, 1, 2, 3, 4, 5, 6. And the entire 6 bars, the RSI was below. So this was telling us, even though you might have thought, well, Steve, you know, the news is out. It's going to be very positive for the Swiss franc. The news is coming out later on today. Or say there's some guy on TV is touting the Swiss franc that you should go long, or say your guru who you subscribe to or go to his chat room or blog is telling you that this is a double bottom right here, so you should be purchasing it. All these outside sources telling you what to do. The only source you should be listening to is the market. And the market is telling you, listen, there's a strong likelihood we're going lower. Forget about all the external noise, which is what's taught to me, and just listen to the market. The market really tells you all you need to know. So once you understand that, you can see here that the trend continued lower. So once you learn how to listen to the markets and these, by the help of these, few indicators and few tools you use, it's a lot easier and a lot cheaper as well, because you don't have to subscribe and spend a lot of money on tools and chat rooms and trading rooms. It's very simple. You can just look at the chart in front of you. Here's a weekly chart of the dollar yen. Once again, price is oscillating above and below, but the minute we cross below right here, the 50 threshold, that's our day number 1. We count 6 days where we're below the 50-period simple moving average, and all those 6 days where we're below the 50 threshold. And look at the nice weekly downtrend that ensued after that in the dollar yen. All right, a 4-hour chart of the euro yen. Same thing, we're below the buy-sell line. We cross below. That's day number 1. We count for 6 days or 6 bars below. It doesn't matter if it's a 5-minute, a 4-hour, or a monthly chart. As long as you follow the same rules, we're below the 50 period or 50 threshold for 6 bars. So that tells us that the trend is going to continue, and look what happened on this 4-hour chart. All right, so now that we know how to discern if there's a large trend underway or there's most likely going to be a nice, strong trend, how can we use this to our advantage? Where would we get in? Do we just get in at the end of the 6 bar, or what if it doesn't pan out? So how can we have a technique? Well, this is edge number 3. This is an entry technique. Okay, this is not a full-fledged system or strategy. This is just an entry technique that you can use and apply here. You still have to apply other things such as money management, such as exit techniques, such as stop placement where you want to make sure if you're tracking the trade. So that's why we say this is just your entry technique alone. Now, if you want to become a full member of Specialist Trading, you can learn all of those other rules. But the rule for finding a trend, what you want to do is for buying, here's your buy entry. Once the 5-period RSI has closed above the 50 threshold for a minimum of 6 bars, which we just showed you, you want to buy when price trades 1 pip above the first short-term pivot high. Okay. Now, for those of you who aren't familiar with what a short-term pivot high is, let me just jump ahead here to the next slide. This is a short-term what a pivot high would look like. It's kind of like a V shape. Okay, short-term pivot. You have these lower lows, then you have this top, and then you have followed by, I should say, higher highs, followed by a top, and then lower highs. So it forms this type of V here. This is a short-term top. So what we're looking for is the first one that is constructed after we had that 6 bars above the RSI 50 threshold, and that's where we want to enter if we trade 1 pip above. So let me jump back now, and let's look at the sell entry rules. Once the 5-period RSI has closed below the 50 threshold for a minimum of 6 bars, now we want to sell when price trades 1 pip below the first term short-term low. All right, so a short-term low is this right here. Here's the short-term low. We have a series of lower lows followed by some type of bottom that's the lowest low, and then we have higher lows. We have this V once again, and then we are just going to go short once we go below there. Okay, let me show you some examples. Now, I'm not going to look this pristine each and every time, such as a V we have here, an upside down V and a V each time, but you'll get to understand how these short-term highs and lows look after you've seen them for a while. All right, let's look at the Australian dollar once again. Here's where we had the first bar. It's where the RSI went above the 50 threshold. We counted 6 bars, and all of those next 6 bars, the RSI was above. So this is telling us, okay, we have likelihood of a nice upward trend starting. But where do we get in? I mean, do I just buy at the market? Do I put a limit in? Here's what we do. We look for that short-term top. Since we're going long, we want to see some type of resistance or support. Here we're looking for resistance, and that would be right here because we have this type of higher highs until we reach this top, and then we have a lower high. So that's this kind of V right here, up and then down lower. So this is our resistance, if you will. Now, it doesn't matter if this happens on the next bar or if it happens 3 or 4 bars later, but as long as we're still above the 50 threshold, we want to get in once we cross above. Now, luckily, we did it on the very next bar, and that's where you could have taken advantage and gotten into this nice trend. Here's that Euro weekly example we looked at earlier. Here are the 6 bars where we closed above the 50 simple moving average. Here's where the RSI closed above the 50 threshold. And within those 6 bars, here was the pivot that was formed, as you can see right there. Okay, it makes kind of like a nice upside down V. So this is where we want to enter if we traded above. And on a weekly basis, you would have entered right here, and in the next couple of months had a gain of like 900 pips roughly. Here's a 4-hour chart of the Canadian dollar we looked at before. We closed above the 50 simple moving average. The RSI went above and stayed above 50 for 6 bars. So we're looking for the short-term pivot, and that was right here. Within that 6-bar time frame, we had a high followed by lower low. So this is our resistance right here. This is where you would have entered, and 150 pips in the next day or so. All right, going short, here's the example we had in the Swiss franc, excuse me. We have the 6 bars below the 50-period simple moving average. We have the 6 RSI bars below 50. So where do we get in? We just sell at the market? No, we look for that V now, which is right here. We have lower lows, a bottom, and then a higher low. So this is where you could either watch at the market and simply sell at the market, or you could place a stop order, however you'd like. But this is where you want to go in as long as the 50 period stays below 50, or the 5-period RSI, I should say. And as you can see, we oscillated around here for 2 or 3 days, but the whole time we never went above 50. Had we gone above 50 on the RSI, this would have all been negated because the market would have been telling us that we're no longer below the 50 line, telling us that a trend is not likely anymore. But we continue to stay below 50, as you can see here. So you leave your order in, and once you got filled, there's a nice 300 pips in the next couple of weeks. Weekly chart of the dollar yen, as you can see, we have 6 bars below. We have 6 RSI bars below 50. Here was the short-term bottom that was created. We entered right here once we went below that support line, and it was 600 pips to the downside in the next couple of months. And then that 4-hour chart, where we're well below the 50-period simple moving average for 6 bars. We're well below the 50 threshold for 6 bars. And here was that first kind of support or V level that was created within that 6 bars right here. So you could have used that for your entry and made a quick 300 pips in the next day. So you're looking for either this little short-term support or short-term resistance to be broken and to go in your direction, and that's your signal to enter into the market. Now let me show you some current examples. These are using multi-time frames once again. I'm going to show you a more advanced way to look at this technique as well, but this is for more advanced traders. But I just want to show you how it doesn't have to be so cut and dry and so intricate. You can make things a little bit more relaxed so that at least you're fitting the foundation of these rules, and you can still take advantage of this nice edges here. Here's going back to February of this year, 2 real nice signals in the Australian dollar. Okay, as we can see here, the RSI, the 5-period RSI, closed above the 50 threshold to the upside, and price is above the 50-period simple moving average on a daily chart. All right, now the currency pair closed above for 6 consecutive bars, as you see right here, and at the same time, the RSI, the 5-period RSI, closed above the 50 threshold for 6 consecutive bars. All right, so this is telling us that we're most likely in the Australian dollar, regardless of news, regardless of technical things that you've studied, regardless of some chat room that you're in, regardless of some presentation you've been to, the market alone, the Australian dollar is telling us most likely I'm going to go higher. If you want to come aboard, come on with me. Okay, that's all you need to know. There's no news that's going to tell you that you're going to be able to discern. There's no indicator. Just the market is telling you. So we look for the first short-term top, which is right here. As you can see, we made this nice little resistance and then headed lower within that 6 bar. Once we broke that, you could have entered, and in the next month or two, the Australian dollar went up 400 pips. Okay. Now, within that time, we started to cross and oscillate above and below, but we didn't either stay above or below for 6 consecutive bars until this point right here, where the RSI went below, and even though price is still above, we had 6 consecutive bars, and the last few bars were closing. This is where I said it's not as cut and dry. It can be a little more discretionary. But your entry, had you used this, and we were below for 6 consecutive bars here on the RSI, your entry on this breakdown of the support would have been below the 50 period. So this is valid. If you want to be a little bit more advanced, this is a valid way to enter. This is where I said you don't have to have all the bars either above or below the 50 period simple moving average. As long as your entry is either above or below, that's fine. So your entry would have been below, so that's valid enough to go short. You could have entered here, and look what happened. The market continued to go lower. Now, had you not taken that signal, there were a number of other places where you could have taken that. For example, right here, we crossed below, and we're below well for 6 bars. So if you wanted to make sure that you were well below the RSI or the 50-period simple moving average, you could have taken this signal right here, all right, and entered somewhere along these lines. Here's a 60-minute chart of the British pound. And this was last week. This was on the 4th. As you can see here, price was coming from above to below the 50-period simple moving average on an hourly chart. At this point right here, we cross below the 50 threshold on the RSI, and we're below it for 6 consecutive bars. As you can see, we formed a real nice little support right here, a nice little short-term bottom. Once that bottom was broken on an hourly chart, look at the trend that continued to the downside. All with the help of this one setting on the RSI, using it not as an overbought, oversold tool at all. We're not concerned with that. Once again, that's pretty much a recipe for disaster. Trying to trade overbought and oversold is really, it's like gambling. It'll work maybe 9 out of 10 times until the time it doesn't work, and I can almost guarantee you'll give back everything. And this is, I know from experience, because remember I said in the first couple of years I was trading, this is the way I traded. I tried to, short things that were overbought and buy things that were oversold, and they would work great until they stopped working, and I'd give everything back. So it's much easier, rather than try to pick a top or bottom, to pick oversold and overbought patterns, rather to just go with the market. And once you learn how to listen to the market, when you see that what the market's telling you, as we see right here in this hourly chart last week, the British pound was telling us it wanted to go lower, just jump on board. That's all you have to do. Here's a 5-minute chart of the Canadian dollar. As you can see, RSI goes above the 50 threshold. We have 6 bars above, and the RSI. Here's the nice V-top pattern we entered once we broke, and then 115 pips to the upside on the 5-minute chart. And then lastly, a more discretionary way of looking at it. This is, once again, this is the Swiss franc. This was last week as well, on the 4th. We started out the countdown below the 50-period simple moving average. So I know a lot of students get confused sometimes. All we're more concerned about is that our entry is going to be above. Now, we had 6 consecutive bars of the RSI above. We formed this nice little resistance right here. And once we broke out above that, we would have entered above this 50-period simple moving average. So this is a little bit more advanced move, but you could have done that on an hourly or 4-hour chart and then seen the nice move that ensued after that. Okay, these are all the things we teach you. Once again, we have conservative and aggressive ways in which to trade. If our students are more conservative, we try to steer them in the way so that their risk is kept low, so that they are not taking these trades which may be a little bit more intense. If someone likes more action, is more aggressive, we'll show them different techniques in which they can enter and have a lot more opportunities. All right, so let's recap. What did we show you today? We gave you 3 edges. The first edge was the proper RSI setting. Even if you don't want to use this technique I shared with you today, you can still use this RSI setting with your standard way of trading. So if you're using the RSI as an overbought, oversold tool, I would strongly suggest stop doing that. There's really no such thing. This is the same thing that was taught to me, so I'm sharing it with you. There's no such thing as overbought and oversold. There is no such thing. It's totally discretionary. How many times have you seen an indicator, stochastic or an RSI, go into oversold or overbought territory and then continue going, especially in the Forex markets? As I said, these markets trend better than any markets out there. So if you get a trend going, you can see something overbought or oversold for days, if not weeks or months. So it's really a disaster waiting to happen. It'll work 9 times out of 10. The 10th time, you'll most likely give it back. So change the RSI setting to 5 period and then look to plot that 50 threshold and the median line. Okay? Now we want to use it as a directional tool. We're not using it as an overbought, oversold tool telling us when to enter, when to exit. We're using it as a directional tool. If we count those 6 bars, those 6 minimum bars above the 50 threshold, we'll most likely have a really nice, strong trend underway. Okay? And then we showed you the entry technique. Once we have those 6 bars settings perfectly set up for us, we look for either some type of support or resistance that was just formed, and that's our tool. Once we have broken that, that's our entry signal to enter. But here's the one thing we want to make sure you understand. These are the points to remember. This is not a complete strategy. Even though I know your eyes may be lighting up and you may be probably checking charts right now and saying to yourself, boy, this is amazing. This stuff really works. It's not a complete strategy. We have not told you about stop placement. We have not told you about where to get out, any exits, and we've not explained any money management techniques. These are all things we provide for our members. It wouldn't be fair for those people who have spent money to become a member and to learn all of this advanced education that I've accumulated in 35 years to give away for free. But I am giving you the basic entry here for free. So if you really want to learn more about that, I invite you to become a member of Specialist Trading. In the next 2 minutes, I'd just like to talk about what we offer before we take any questions. This is my website. As you see, I offer courses in stock, E-mini, and Forex trading. And here's just a few trades we had this past week. We went long the Swiss franc and had a quick 166 pips last week. It's an actual trade that all of our members were privy to and had signals the night before of where to enter and where to exit. And then here's the euro-dollar trade, same week last week, 220 pips you could have gained in that trade. Once again, all of our signals are furnished to our members, but we're more of an educational company. We just provide you with signals so that you can kind of check your homework, so that you know you're in line. Ultimately, we want you to find these signals for yourself. Now, we offer probably our best course, our swing trader course. That's strategy number 5. As you can see, these are the results we've had in less than 2 years. Detailed instruction. We give you all the entries and exits, 1-year trade signal alerts, weekly trading lessons, PDFs, and my personal email access. This course usually runs for $5.95. We're discounting it for all of our FX Street attendees today for $3.45, okay, for a limited time only. So if you're interested in learning more about what I've taught you today and learning where to exit and where you get your entries and exits and also to have 1-year trade signals, we strongly suggest becoming a member and picking up strategy number 5. This is our most resilient and popular strategy we have for trading the Forex market. Now, for more information, once again, please go to the microsite that FX Street has provided for us here. This is the link in blue, but if you want to shorten that, I would suggest having this right here. This is where you can go and find out more about any information about our strategies or any information about specialist trading. This is the microsite they put together, and you can get more information there. Okay? All right, we have about 15 or so minutes for questions. Remember, if we run out of time, or so many times I give presentations and students will come up with a question after we've concluded, here's where you can contact us. Contact my VP of Research, that's Brett Marsh, at brettm@specialisttrading.com, or you can call us directly at 310-844-7220. Once again, our sister site, which is Pro Trader Strategies, has all the information regarding our individual strategies. Okay? Let me see questions here. What is the winning percentage and the average risk-reward ratio? That's from Youssef. Okay. Remember, I don't know if Youssef, if you were here from the beginning of the presentation, I stated that this is an educational company. We're not a systematic company. In other words, you can only get winning percentages and risk-reward ratios if you do the same thing each and every time. But what we do is we provide our students with education so that they can fit and mix and match all the things such as what I shared with you today to fit your needs and your trading persona. In other words, as I just stated, some trader may want to trade more aggressively. Well, his results are going to be different. Another trader may want to trade more conservatively. His or her results will be different. What time frame do you want to trade? One trader may want to trade one of our strategies on daily bars only. Another one may want to trade them on 60 bars or a tick chart. So there are a million and one ways to trade them. In order to provide risk-reward ratios and things such as that nature, you'd have to trade the same thing each and every time. And we don't, I think even the gentleman before me at InterTrader was saying the same thing. You can't provide that because there are too many ways to trade, and we wouldn't want anyone to trade the same way. Everyone is different. A perfect example is a number of years ago, I had a trader sit with me for a couple of weeks. He really wanted to learn how to trade my style. So he sat with me. I told him exactly what I traded. We went through trades. I showed him my techniques. And after 2 weeks, he had it all down. We kept in contact. And for some reason, he just couldn't make money. Well, he was trading the exact same market, the exact same strategy, exact same risk-reward ratios, everything that I had personally. He couldn't do it. And I said, well, you see the signals. We knew where there was a buy signal. We knew there was a sell signal. Why did I make money and you didn't? It's because he couldn't pull the trigger. It didn't fit his needs. He wasn't as adverse to risk as I was. So the same thing will not apply to the same person. So that's why you cannot in any way have a systematic type of results when we're giving education. Okay, I hope that makes sense. The only reason why I go so heavily into this is because so many people ask that question, and I totally understand it. When I was just starting out myself, I wanted the same information. But remember, that only applies to systematic teaching. Systematic meaning that it's the same thing each and every time. Okay, we are not that way. We're an educational company. We'll provide you with the tips and techniques and all the methods that I learned on the floor, and then we fine-tune them to fit your needs. All right? I hope that explains it. What strategy has better results, this or strategy number 5? Okay, first of all, Michael, this was not a strategy. Remember, I just stated, I think, about 4 slides ago, this was not a strategy. I just gave you the basic, beginnings of this. Strategy number 5, if we're only looking at daily bars, okay, you can trade strategy number 5 on tick bars, 5-minute time frame, hourly bars, but if we're only looking at daily bars, we have the results for strategy number 5. I would say strategy number 5 has the best results, okay, but the reason why we only have results for strategy number 5 is because we have daily results from when we've issued signals, all right? If we were not issuing signals, we wouldn't keep track of it because there are a million ways to use it. But strategy, as we said, if I can go back here really quickly, it's 150% in less than 2 years. And this is, great. This is looking at if you had an account of roughly 15,000 to hold positions overnight. Okay, let me go on to some other questions here. Hypothetically, Carlos asks, if price trades 1 pip above or below the pivot high or low and it retraces, can we use the pullback to execute our entry and use this 1 pip above or below rule as an entry confirmation signal? That's a very, Carlos, you are an advanced trader. Yes, that's an advanced technique. And yes, you can basically say what, in other words, if you're waiting for a price to trade 1 pip above or below as confirmation, what you can do, Carlos, is wait to see price trade 1 pip above that level. In other words, that support or resistance level, and then that's not your entry. Then you wait for a little pullback, and then you get in. Now, we teach you how to trade that method. That's a method we teach for advanced traders because most people will say, okay, we went above, and most of the times we'll go above, we'll retrace a little bit. But then they don't know where to get in. They'll say, well, where do I get in exactly? We have a specific method that really fine-tunes your entry for entering on that retracement or that pullback once you've gotten the confirmation. So, Carlos, that's a very astute way to perceive how to enter. That's a more advanced entry level, and we teach exact entry levels using that technique as well in our classes, okay? So, yes, you can do that. I would say you can. Any more questions before? Now, I know a lot of you have attended my presentations before. Each month, I give a totally different presentation, and what I like to do, just to show you how much I stress education, is each time I give a presentation, I give you something so that you can go look and use and see for yourself if it fits your trading needs. So these are all little golden nuggets and bits of information such as I shared with you today. Many times I'll talk about position sizing, different techniques for that. Other times I'll give you some entry techniques, some exit techniques, some stop placement techniques, but they're all these different things that we help you mold onto your trading style, okay? So stick around and follow us. I know that this presentation is being recorded. Perhaps there are some archives of our other presentations you can find on FX Street, and you can see all the information we've given. Trying Trader asks, in your opinion, what is the average time it takes to become a profitable trader? That's a very good question. I think, I used to think that there was a set time, but I know it's different from now for the past 5 years of teaching so many people. I've had students that have taken maybe a year or so to finally understand it and to get on that road to consistency. I've had other students that have taken maybe a couple of weeks. And in fact, I had an email from a student a little while ago saying, you know what, I have been trading for 3 years and never made a dime. From your first class, I had my first profitable trade. So, you never know. It really has to go, once again, every trader trades differently. This was something that Mr. Ruffley spoke about in the last presentation. This is why I really appreciated his presentation so much, because he's along the same lines as I. Traders that have been trading for a while know that there is no one way to get to that level of consistency. You need a lot of different information, a lot of really sound education, and then you need to apply the things that fit to your trading style, and then disregard the things that you don't really use or don't really fit with your persona, and that will lead you on the road. Now, some people may take a couple of weeks, a couple of months, maybe a couple of years, so it's different for everyone. The one thing I can promise you is that at Specialist Trading, we're there with you every step of the way. It's not like we're going to just feed you this and then say, well, okay, thanks, good luck. I answer emails. I even, from time to time, if something is really serious and a student just cannot understand it, I will talk to them personally and meet with them. But this is really about education. I've been trading for 35 years. I know personally how difficult it can be. I'm not coming from someone saying that I've always made millions and millions of dollars and it's so easy, just follow what I do. I know that that's not really the real answer. I know how difficult it can be. I've been there. I know how frustrating and how you can be discouraged. So I really want to shorten your learning curve by giving you the 35 years experience that I've learned and taken and really apply it to you so that you can shorten it and won't have to go through most of the mistakes that I made myself. Okay. Boyke asks, do I consider fundamentals? Hi, Boyke. No, I actually don't. In fact, at most, I'll consider fundamentals as something to almost like fade, because fundamentals, the reason I don't consider fundamentals is because fundamentals are, once again, subjective. There can be news or fundamentals about a company or the economy or anything that you're looking at, some report, and someone can discern it one way and someone can discern it another way. This is really what I had difficulty in when I first started trading. I thought that all the rules, well, if a good report, if the numbers came out right, or if some sound economy numbers were here or there, that was good, and ultimately things would go up, and if the reverse happened, things would go down. Well, it couldn't be further from the truth. Sometimes it would work and sometimes it didn't, and I know you've all seen that before. There's no way to accurately predict this 100% of the time. I like things that are more cut and dry, such as I shared with you today. I want to know that if price is above that 50-period simple moving average, that I'm looking to go long, and that's it. I've already answered my question. I'm not concerned about shorting anything. I'm not concerned about numbers. I just know that if price is above the 50-period simple moving average, I'm just looking for long setups. And then I go to the next step. Now I look at the RSI, or I look at another indicator, or I look at other patterns that we teach at Specialist Trading. So I really do not consider fundamentals at all. I think the only time you have to would be for long-term investing. Okay, in that case, yes, I would consider fundamentals. But I don't teach really about investing or long-term holdings of any positions. So I really can't give you an answer for that. But in terms of trading and swing trading, which is what I do and what I teach, I don't look at fundamentals at all. Okay, and this was another thing that was taught to me on the floor. I thought for sure this is what I had to know. I had to know about my companies. I had to know about all the stocks that I traded. And these elite traders on the floor said, why? I mean, why would you need to know what it does? If the stock's going up, you just want to go with it. If the stock's going down, you want to go with it. That's it. I mean, there's no reason you need to know about how a company is doing if you're going to be out in the next half hour or a day or so. All you need to know is what its current direction is, and just go with it. So it's the same things that I teach. If I'm investing, then definitely I would need to know about what's going on in the world economy, what's going on with certain numbers. But for short-term trading, I really feel there's no need. It'll only stand to get in your way and complicate things. Trying Trader asks, would you say it is easier to learn to read prices direction, but more difficult to learn to, well, I didn't get the last part of your question, but once again, regardless of how you're going to conclude that sentence, it's pretty subjective. Everyone's different. Someone may look at something and be able to understand it in a week or two. Someone may take months before they really understand price direction. So this is why we're an educational company. We teach you these things. And I know how to stay with someone who really doesn't understand the concept, and I know how to leave someone alone who's already understood it and move on to the next concept. So this is why we're really more concerned about teaching than telling you to trade exactly the way we trade. How many pips drawdown are you willing to accept? If that's a personal question, I mean, personally, I'm willing to accept maybe 50. We have a lot of times signals that have 100 pips drawdown, but we won't take them we won't tell our students to take them if that's out of their risk parameters. So it all depends on your capital size, your risk parameters, what you're trading. Are you trading a large lot or a mini lot? It all depends. Personally, about 50 is my threshold, but that's once again is discretionary. This is why we say don't trade the way someone trades. It won't fit. Excuse me. Someone may say 50 pips, that's nothing. Another person may say 50 pips, wow, I risk no more than 15. It's all up to you, but we show you ways to fine-tune that to meet your needs, okay? Carlos asks, does this work in lower time frames? Yes, it does. In fact, the strategy we showed you, strategy number 5, let me just go back here real quickly. This is the one we talked about. It's the most resilient strategy we have, and the thing I like about it is it works really well in other time frames. There's a student I spoke to last week who only trades this on an hourly chart and done very well. And so this is a great technique for working on different time frames. So yes, most of our strategies will transfer over, and some work in better time frames than others. The beauty is that we tell you which those better time frames are. So you don't have to go through each and every one and try to figure it out and take months and weeks to find out what the best time frame is. We'll tell you right off the bat from our experience which works better and which doesn't. Okay, we have time for about 1 or 2 more questions. Hope I got to everyone. And FX Trader asks, what strategy number is this? Well, the strategy that or not the strategy, but the technique I gave you today is not a strategy. It's just a technique for finding trends, okay? The strategy that we have back here, once again, if I backtrack, this is strategy number 5. This is our most popular course. This is the easiest, and this is one of our most popular courses and our most resilient. It's trades in any time frame in any direction. That's strategy number 5. But what I taught you today is not a strategy. It was simply a technique for finding the trends. Okay. Now, one of the best things you can do about this is that you can. What I taught you today is once you know the rules, you've counted 6 bars, you see the RSI, then you can say, okay, well, I got the trend. Then you can apply any strategy to that. So now you know you're in a strong uptrend. You can apply any strategy you'd like. Okay. So I think that's just about it. I want to thank everyone at FX Street. Thank you, Ma. Thank you all the good people at FX Street. Thank you to all the people that attended today. Remember, you could take advantage of that special discounted price we have going through FX Street for strategy number 5. If you have any questions, if you want to learn more about us, let me just show you the microsite. Here's the link once again, that you can have this abbreviated link, and this will take you and give you much more information about what we do and how we teach at Specialist Trading. This is all our course descriptions, a little bit more bio about myself. And here's our email and phone number to contact us if you have any questions. Thank you so much. Have a great week. Wish you the best of luck. If you have any questions about what I taught you today, give us a call or an email, and we'll get right back to you. Have a great day. We'll see you next month. Bye-bye.